Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks and European futures tick higher after the S&P closes near a bull market, shrugging off the US ratings downgrade. But JP Morgan's Jamie Dimon cautions against complacency in the face of mounting risks. Donald Trump warns on the Ukraine peace talks. Following his call with Vladimir Putin, the US president says he will back away if progress isn't made. Plus, power surge. Shares in EV battery giant CATL soar in Hong Kong, wrapping up the world's biggest listing so far this year. Happy Tuesday, everyone. So European futures taking the tailwind then from the US gains. 6 straight days of gains stateside. European futures pointing higher. The optimism over in Asia as well on the combination of the IPO, of course, of CATL, but also those easing trade tensions as well. So European futures pointing higher by about 0.5%. FTSE 100 looking to gain around 41 points so far in the session. S&P futures then, after 6 straight days of gains near that bull market territory, a bit of a pause coming through. Down 0.2%. We saw the dip buying coming through with retail investors on some metrics. A record dip buying, more than $4.1 billion worth of US stocks by around midday stateside in the session. Nasdaq 100 futures pointing low, though, by 77 points so far. Let's flip the board and have a look cross-asset. We've seen the volatility in the Treasury markets as a result, of course, of the downgrade from Moody's and the adaptation from the markets in terms of thinking about the Federal Reserve. Fed officials coming out in a number yesterday suggesting that they are very comfortable being in pause territory because of the lack of transparency going forward on the impact of tariffs and trade. 445 right now on the benchmark US 10-year. The 30-year, the last time I checked, was back below that 5% level. Euro dollar at 112, just a little stronger by 0.1%. Brent on oil prices down 0.3%, and gold also a little softer, down 0.4 on the yellow metal at 3,216. Let's check in on the Asian markets then. The focus is on that IPO again, as we said, the largest so far globally of CATL, the EV battery maker in Hong Kong. So the HSI is gaining on the back of that. The optimism is there, up 1.3%, reviving potentially those capital markets of Hong Kong. Broadly across the benchmark, you're seeing the first straight day of gains in about 4 days, up 0.4%, and CSI 300 mainland China benchmark rates being cut by the banks there. That benchmark index is currently up 0.6%. Let's get to the geopolitics now, because Donald Trump says Moscow and Kyiv will begin talks immediately on ending the war in Ukraine after he held a 2-hour phone call with Vladimir Putin. Trump says some progress has been made towards ending the fighting, but warns he will back away if a deal is not reached.
Big egos involved, I tell you. Big egos involved. But I think something's going to happen. And if it doesn't, I'd just back away and they're going to have to keep going. I would say I do have a certain line, but I don't want to say what that line is because I think it makes the negotiation even more difficult than it is.
Well, for more, let's bring in Bloomberg's Russia team leader, Tony Halpin. Tony, top-line question. Is this a win for Putin?
Yes, I think so, Tom. On the face of it, Trump and Putin went into that call with the US president basically having pressure from the European and Ukrainian side to push Trump toward accepting a ceasefire. If you remember, a week ago, that was the demand from Ukraine and major European powers, that Putin sign up immediately to a 30-day ceasefire or face sanctions. They had some expectations that that was what Trump was going to do when he went into the call. Instead, the call ended without Putin giving any commitment to a ceasefire on a clear timeline. The war continues. He committed to negotiations, but again, with a very vague timeline, and it wasn't clear really what they were going to negotiate about. And Trump didn't impose any threat of sanctions if those talks didn't make progress. So fundamentally, I think Putin's far more comfortable with the outcome of yesterday's call than Ukraine or Europe.
Where then, Tony, does that leave European leaders? Where does it leave Zelensky? And where does it leave the prospects being pushed through by the Senate of potential additional sanctions on Russia? We know the Senate is gearing up for this, to be able to give Trump that option. Where is that in this calculation?
Yes, I mean, Lindsey Graham's bill, which threatens bone-crushing sanctions on Russia, does have bipartisan support, and they say it's ready to go when and if the White House requests it. But there doesn't seem to be any urgency on the part of Trump to ramp up sanctions in order to bring Putin to the table, which is what Ukraine and the European powers had hoped for. And they're left somewhat adrift now. They're coming to the realization, I think, that the kind of demands that they were making of Putin are not shared by Trump, and that therefore they're left with the realization that they're basically going to be on their own supporting Ukraine if these talks don't make progress, because, as Trump indicated, he may walk away. And that's putting them in a very difficult position. They're not sure that there'll be increased sanctions pressure from the US. They themselves are threatening to increase sanctions, but Russia has said all along that it really won't be moved by sanctions, and it's not clear what Europeans have left in the locker that would really hurt Russia.
OK, Bloomberg's Russia team leader Tony Halpern on the back of that call, of course, between the US and Russian president, where that leaves things in terms of that ongoing conflict. We appreciate the update. Now to macro policy, with Atlanta Fed President Raphael Bostic repeating that he sees only one rate cut this year because of tariff uncertainty.
If it takes negotiations a longer time to settle things out, we have another 90 days on China, for example, that starts to push much further into the summer, in which case we won't actually know what the true effects are going to be for several months after that. If that's how it plays out, then sure, I think, and right now I would say in my SCP I have one cut only for this year, because I think this is going to take longer to resolve than it might have otherwise. But things could go faster. It could be the case that these negotiations bear a lot of fruit. We know what the numbers are, and they perhaps come in lower than people are expecting. In that case, we may be able to pull forward some of our actions because there may not be as much that we need to do in terms of managing the price level.
Let's bring in Bloomberg's Valerie Teitel now. Then Raphael Bostic, then Val, talking about just one cut this year. Other Fed speakers saying we need more data, we need more clarity in terms of how the tariff impact is filtering through. What is the takeaway then for these markets?
The takeaway, Tom, is that the Fed is going nowhere fast. The outlook is extremely murky, and we will have a Fed on hold maybe until the end of the summer. John Williams also added to that chorus yesterday, saying it's not going to be that in June we're going to understand what's happening, or July. That it really implies that they are on hold until their meeting after that, which is September. Now, that's not really telling us nothing we already know. We are pricing in that the next Federal Reserve rate cut is in September. So this is just Federal Reserve members repeating really what's priced in. But the market really shrugged this off yesterday. We saw a decent rally in the Treasury market. Even the two-year yields posted some decent gains, but also posted some decent gains and completely shrugged off that Moody's downgrade by the end of this session was the S&P 500. We closed in the green, up 0.1%. We're now on a cusp of a bull market, Tom. 19.7% from the lows on the 8th of April. We're now on a 6-day winning streak for the broad S&P 500 index. A lot of what driven these gains yesterday was retail investors. Take a listen to these stats from J.P. Morgan, that at noon time, Eastern time yesterday, there was a record amount of buying from retail investors. Over $4 billion of retail buying was present in the market today around 12:30 Eastern time yesterday. And by the close, J.P. Morgan saw that there was a record amount of percentage of volumes. 38% of volumes yesterday were driven by retail investors. This is very much a buying the dip mentality. Let's see if it ends with the S&P 500 closing in bull market territory today.
OK, we've seen those retail investors step up before, and we saw it again yesterday, didn't we? Bloomberg's Valerie Teitel, thank you. Let's turn our focus now to the Qatar Economic Forum in Doha, where we are live all week. We're going to be discussing, of course, the shifts in global money flows, making the Gulf not just a dominant energy supplier, but a finance and investment hub as well. Bloomberg Horizons anchor Jumana Pasecci joins me now from the Qatari capital. Jumana, how will President Trump's trip, which you were covering for us last week, feature in the conversations this week on the ground in Doha?
Yeah, well, the timing is pretty good for the Qatar Economic Forum. Things kick off in about 90 minutes, Tom. And I would say this is a great opportunity for us to listen to some of the big leaders from the region, policymakers, both from the GCC and from all over the world, about their perceptions on back of President Trump's quite historic trip around the Gulf last week. And for all intents and purposes, it was deemed to be a massive success. Many of these Gulf countries were given an opportunity to showcase that, as as you were just saying, they are not just countries that are provider of capitals and energy-dependent states, but also countries with big economic ambitions, be it in artificial intelligence and in other domains as well with the diversification efforts. But that being said, Tom, it was also a crucial week geopolitically as well, because it showcased that these Gulf countries are playing a huge role in diplomacy, in diplomatic mediation in the region, with the big surprise announcement last week that the U.S. were looking to remove sanctions on Syria, with some role played there by the Saudi Crown Prince, the Turkish President Erdogan, and indeed Qatar as well, where we are today. And President Trump talked about economic prosperity going hand in hand with regional stability. So he's painting this vision of what a more stable Middle East could look like outside of the Gulf region. That being said, Tom, you've got to wonder how much regional stability there can actually be for the broader region in the absence of a solution between the Palestinians and Israel. This conflict has been going on for decades now. Just in the last 24 hours, Israel has once again intensified ground operations into the Strip. The Israeli Prime Minister saying that they would look to take full control of the enclave in an effort to persuade Hamas to release more hostages. No real signs of a breakthrough on the ceasefire. At the same time, as a humanitarian crisis rages on, Israel has said that they will allow for the passage of aid into the enclave, but it's been almost 3 months now with three-quarters of the population in a state of severe hunger and close to famine. So the situation, the humanitarian situation on the ground is still quite dire, and that is also something that President Trump alluded to last week. So yes, breakthroughs in many respects, but then also a worsening situation in Gaza to deal with.
Yeah, and as you say, a humanitarian crisis that we should not shy away from as well. On the economic deals front, Jemana, as we keep, of course, the impact on human lives in both Gaza and Israel in focus, on the economic deals, what do we expect to move on that front over the next few days in Doha?
Well, there were lots of these headlines that came out of the meetings last week, the bilateral meetings between President Trump and the leaders. In Qatar specifically, the big headline was $1.2 trillion of economic cooperation. And we found out through subsequent days that about half of that is going to come from QIA, that is the Sovereign Wealth Fund's investments into the U.S. They've pledged to invest $500 billion over the next 10 years. I will be sitting down with the CEO later to talk about this and where exactly they're seeing those opportunities. But then we were also just a while back, Jennifer and I were speaking to the head of the Nigerian Sovereign Wealth Fund, and he was saying that if anything, they still believe in America Inc. They still see a lot of opportunities in the U.S. over the next 20, 30 years. And yes, what's happening right now has created a bit of hiccups and volatility in market, but the America Inc. thesis is still very much there. And that seems to be resonating with so many of the people who we're going to be talking to over the next couple of days. Policymakers, but then also some of the biggest investors around the world are coming here too. We're going to be having discussions with them about what they really do see as the major thematics over the next year or so. Will U.S. recover? And at the same time, we touched on this earlier, artificial intelligence, a major theme in this part of the world, as well as so many of these countries pour trillions of dollars into building out their own AI capabilities and these data centers. Are there national security concerns? NVIDIA CEO doesn't seem to think so, based on the interview that we had with him over the weekend. But definitely national security alongside artificial intelligence is going to be another theme that comes up here as well, Tom.
OK, Bloomberg Horizons host Jemana Besetchi on the ground for us in Doha for the Qatar Economic Forum. Of course, Jemana will be live throughout the week, bringing us some fantastic interviews as well. We are going to be live on the ground. Guest highlights include none other than Elon Musk, Steve Mnuchin, Donald Trump Jr. and the head of Qatar's Sovereign Wealth Fund. So really crucial interviews and conversations you want to stay tuned for. You can get a roundup of the stories as well you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go on the terminal. Coming up, the world's largest EV battery maker makes a lightning debut in this year's biggest listing, despite the geopolitics. We're going to have the details next. Plus, OpenAI sets its sights on expansion in Europe. We bring you an exclusive conversation with the Chief Operating Officer, Brad Lightcap. That is coming up later in the show. This is Bloomberg.
This week, Bloomberg brings you live coverage from the Qatar Economic Forum. Bloomberg Horizons Middle East and Africa and The Pulse will be broadcasting live from the conference floor. Then, throughout the day, we'll bring you all the highlights from the key policymakers and market movers on the issues confronting the global economy. Live coverage from the 5th edition of the Qatar Economic Forum continues this week right here on Bloomberg Television. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now the world's largest EV battery maker soaring after debuting in Hong Kong in the world's biggest listing this year. CATL raising more than $4 billion despite being blacklisted by the Pentagon.
This listing signifies our deeper integration into the global capital markets and marks a new milestone in our mission to drive the global zero-carbon economy. CATL is not just a battery component manufacturer. We are a system solution provider and are committed to becoming a zero-carbon technology company.
Well, the stock is up about 17% since the listing today then. Let's bring in our China Autos reporter, Linda Liu, for the context. Linda, this is a big deal, of course, for the capital markets of Hong Kong, as we mentioned, the size and scope of this IPO, and it is a dominant player in the electric vehicle battery space. How are they going to use the funds that they've raised from this IPO to expand? How much of that is going to be about an international push by CATL?
So actually, the funds will largely be used to fund a European expansion. CATL is making big inroads into the region. They've already got 2 factories that's up and coming, Germany, which is already operating, as well as Hungary. They've also announced recently they're looking to start up another joint venture with automaker Stellantis. So they're really ramping up the pace there, especially considering that Europe's own battery maker, Northvolt, went under recently. I think there's a lot of room, for CATL to really move into that gap that's been left now, that demand that EV makers are really looking to fulfill.
Yeah, what a contrast with the fortunes of Northvolt, of course, that prospect in Sweden that has faced bankruptcy. What does it mean then, the push? CATL, they're going to be huge in Europe. They're obviously dominating it in China, but they're largely shut out of the US market despite supplying Tesla. What does it mean for the EV race?
Yes, CATL's founder, Robinson, has said before, if the US allowed them, they would definitely build factories in the US to help supply automakers there. But now, because of the geopolitics, they've had to resort to this licensing model. They're working on one with Ford, looking to license its technology to the battery plant that it's building in Michigan. Now, this means that a lot of these automakers probably won't be able to get the technology know-how as fast or ready on demand as their counterparts may be able to do in China or Europe when CATL sets up their presence there. So this could mean that maybe other than Tesla, the EV race could really diverge, with China and Europe having really ready access to a sophisticated EV supply chain, while in the US, the supply chain may be not as advanced as they may be.
China Autos reporter Linda Liu, thank you for the context on the size and scope and, of course, implications of that listing of CATL and that ambition to push further into the European market whilst remaining largely frozen out, of course, of the US market. Now, some other stories making news this Tuesday. China accusing Washington, talking of which, of undermining recent trade talks with its warning that using Huawei's AI chips, quote, anywhere in the world will violate US export controls. The Commerce Department issued the statement last week. The US has since toned down its language, removing reference to anywhere in the world in its updated statement. UBS is said to be heading for defeat in its first efforts to water down a Swiss law raising its capital requirements. Sources say the proposed bill would force the lender to boost its ability to cover losses at foreign units to 100% of their capital. That would mean as much as $25 billion in extra capital. Coming up, Britain's Prime Minister Keir Starmer touts a UK-EU deal but leaves many details unresolved. We get the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Britain's Prime Minister Keir Starmer has heralded a landmark deal between the UK and the European Union, which he says is a reset moment for relations. But many details remain unresolved. Let's get more with our Bloomberg UK correspondent Lizzie Burden, who was at the summit yesterday where the agreement was announced. So, Lizzie, as with many UK-EU talks, we've got here a compromise on fish, which makes up, what, 0.04% of our glorious economy?
Yeah, how can we talk about anything Brexit-related and not talk about fish? But fish was the deal maker in this landmark deal, which, of course, we know they only got to at 2 a.m. yesterday morning. The reason it was the deal maker was because Britain agreed in the end to extend reciprocal fishing rights for 12 years. Originally, the government only wanted to extend the deal for 4 or 5 years after it expires next year. But that was in exchange for a non-time limited deal on food checks. And this was really the masterstroke from Brussels to tie the two together. But because of this concession, the opposition parties here in the UK really are seizing on it. So it's the likes of Kemi Badenoch, the Conservative leader, the former Prime Minister Boris Johnson, and the Reform UK party leader, of course, Nigel Farage, painting Starmer as caving to Brussels and using the old language of Brexit, that the UK is becoming a rule taker once again. But you are right to point out just the disproportionate political attention that fish got in the Brexit years. Disproportionate, I say, because it just contributes 0.04% to GDP, so a tiny fraction of the economy. But the Conservatives and Reform will hope that they can stoke that political issue. Starmer will hope that voters care more about, the NHS and immigration than Brexit, that they want to move forward. And the government actually arguing that this deal overall will add £9 billion to the economy by 2040, which will largely offset the cost of US tariffs, even if it goes nowhere near to offsetting the cost of Brexit.
So overall, if we take a step back then, do we frame this? Is it being framed as a win for the Prime Minister Keir Starmer? And is this just the start then of negotiations on lots of other issues they're going to be unfolding in the weeks and months ahead?
Well, look, inevitably the EU is the bigger fish in this, so inevitably the EU would do better out of a negotiation like this, but inevitably it's going to be a compromise, and the UK has won some things as well. I think what's interesting are the parallels between Starmer and Trump in the deals that they've done so far in 2025, because they've both seemed willing to leave a lot of I's undotted and T's uncrossed. On youth mobility, the UK and EU only agreed to work towards a youth visa programme. We don't have any details really on UK access to that €150 billion defence fund, and on access to the e-gates in EU countries, they just said there's potential use where appropriate. So actually, like Trump, there's a big gap between the rhetoric of the deal-making globetrotter and the actual details in the document.
Yeah, no guarantees that we can use those e-gates come this summer. UK correspondent Lizzie Burden, thank you very much indeed. Coming up, French President Emmanuel Macron, meanwhile, touting record foreign investment at his Choose France summit. We're going to hear from the French ambassador for international investment, who was at last night's gathering, around the FDI flows into France, what Europe and France can do to attract more investment, which is still pretty languid. That's coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks and European futures tick higher after the S&P 500 closes near a bull market. Shrugging off then the US ratings downgrade, but JP Morgan's Jamie Dimon cautions against complacency in the face of what he describes as mounting risks. Donald Trump warns on the Ukraine peace talks following his call with Vladimir Putin. The US president says he will back away if progress is not made. Plus, power surge. Shares in EV battery giant CATL soar in Hong Kong, wrapping up the world's biggest listing so far this year. Let's take you to the markets then. After 6 straight days of gains for the S&P 500, as we mentioned, closing in on bull market territory. US futures now pointing a little lower by about 0.1%. A bit of a pause coming through. Retail investors played their part yesterday in turning around sentiment stateside. European futures then pointed to gains of 0.5%, getting that lift from the US session. FTSE 100 futures also pointed to gains of a similar amount, looking to add about 42 points. Let's flip the board and have a look cross-asset. We've seen that volatility in the Treasury curve, but it's stabilising in the session today. 4.45 right now on the benchmark 10-year yield, largely unchanged. Fed officials, though, in no rush, it seems, to cut, possibly not until September. 112 on the euro dollar. The single currency is up 0.1%. Oil prices down 0.2 on Brent, and gold also feeling a bit of pressure, down 0.4% in a broadly risk-on mood, currently at 3,218 for the yellow metal. Now, French President Emmanuel Macron is touting more than 40 billion euros in foreign investment at an annual gathering with business leaders as he seeks to send an upbeat message about the economy. The funding was announced at the Choose France summit last night, which brought together executives at the gilded Chateau de Versailles near Paris. French Ambassador for International Investment, Pascal Cagni, was there on the ground, and he joins us now from Paris. Pascal, thank you very much for your time. Give us your top line. What did you make of the investment deals? How material were they? How consequential? How much was repackaged and re-announced? Was this significant?
Here again, we did it. For the 8th consecutive year in a row, having been in my functions for all of these years, I can tell you that we surprised everyone. We have actually in excess of 50 new investments for a total of 20 billion, which are adding to the 47th to date that we have. So it's a real performance. I remember back on February 11th, we announced at the AI Summit an overall package of 109 billion of euros, out of which 17 has been concretely signed and announced this time around. But the truth of the matter is, if you have any doubt, is that when you look back at the 8 years and the 170 plus investment we've done, less than 10 has been challenged to date. So this is real. This is really bringing jobs. This is demonstrating that no matter what have been the 2024 challenges, both internally in terms of elections and possibly lack of majority, the investors continue to vote with their checkbook, and that's what is really critical. So I believe we are very, very pleased of what has been delivered over the last 24 hours.
OK, and yet the broader picture is challenging. FDI in Europe, so foreign direct investment into Europe, falling to a 9-year low in 2024. What more, Pascal, does France and Europe need to do to revive sentiments around investment in France, in Europe?
The truth of the matter is the IRA for Mr. Joe Biden has been critical to basically bring an increase of up to 20% of the FDI towards back the US. If you add to that the issue of the volatility created by the happening and the plan of Mr. Trump's, there is no question on the fact that the overall FDI have been decreasing. But in that battle, France, for the 6th consecutive year, as per EY essentially announcement, have been leading the way with in excess of 1,025 investment in France, far ahead of either Germany or UK. It doesn't mean that we need basically to continue on that, but what we need is continue to fight on simplifying overall our way of going to business. We certainly have a cost per hour which is still too high, but maybe we need also to basically regroup the savings that we have in Europe and to reinvest them into the AI, the green transitions, and many of the revolutions, or the technological revolutions coming up. So that's what is at stake. So yes, we've got a challenge. Within the challenge, we continue to do well, but a lot more to come.
Look, you have your ear to the ground. You speak to CEOs, you speak to lawmakers, you speak, no doubt, to the French President Emmanuel Macron. What is your assessment of what Trump's policies are doing to investment flows?
No, I really believe that we tackle the AI revolutions, right? Tom, you need to understand that what has been announced yesterday is real. We are bringing up to 35 sites ready-made with the right energy, which, as you may recall, is largely decarbonated, one of the more competitive in Europe. More competitive in Europe, but still twice the price of what you get in the US. So part of the overall deal is that we need to refocus on how we're going to source a decarbonated energy at a competitive cost. We need also to ensure that we continue to have a demand which is here, because remember, investors as a first criteria come to serve a market. Our market in France, close to 70 million inhabitants, but from France, they want to use also France as the best springboard to go after the 450 million inhabitant market. If I'm adding UK, you're even above 500. So that's why we're at stake. Now, for that, again and again, we need to be strategic, allocate our resources, a handful numbers of projects, ensure that we basically embrace the AI revolutions, both from applications, so we increase and extract productivity of the European business, while we basically embrace also that revolution, which is absolutely massive. So that's really what has been on the agenda. The president has been meeting also challengers like the CEO of BYD, challengers like Mr. Slim, the leaders of one of the largest telco in Mexico. We have been also embracing the large capital platforms. For the first time, Steven Schwarzman, a huge supporter of Trump, was present, just to illustrate how much that that event has been taking traction, as attractions all around the world.
OK, Pascal Cagni, thank you very much indeed for that context on the back of that investment summit. Chairman of Business France and French Ambassador for International Investment, previously senior role at Apple as well. Now to some other stories making the news today. Prime Minister Benjamin Netanyahu says Israel will take over the entire Gaza Strip as its military prepares for what it calls an unprecedented attack on Hamas. Israel's government says it is to start aid flows again after stopping them in early March. This as France, Britain and Canada signed a joint statement calling Israel's blockade wholly disproportionate. President Donald Trump plans to head to the US Capitol today to rally House Republicans behind his tax cut legislation. Despite general agreement among Republicans on the reductions, lawmakers have clashed over cuts to safety net programs and deductions for state and local taxes ahead of a self-imposed deadline of the end of this week. Coming up, OpenAI's COO tells Bloomberg the company is seeing huge demand from businesses and governments for its AI tools as it sets its sights on European expansion. We're going to bring you that exclusive conversation with Brad Lightcap next, plus the CEO of Quantinuum joining us live from the Qatar Economic Forum, claiming to be the leader in quantum computing on the back of a deal. We'll bring you that interview. We're going to be discussing the outlook for quantum computing in the Gulf and beyond. Stay with us. This is Bloomberg. Welcome back. OpenAI's chief operating officer has told us the company is seeing huge demand from businesses and governments wanting access to its AI products. Brad Lightcap, who recently took over day-to-day running of the AI mega startup, spoke to me exclusively here in London as the company looks to push further into the UK and Europe.
The demand has been extremely healthy, surprisingly healthy, and that's why we're here. So in the UK, in Paris, and now opening an office in Munich, we like to be where our customers are. And increasingly, we're seeing a lot of customers in Europe want to work with OpenAI and want to use these tools. So it's actually, trend-wise, I think the story hasn't really been told. But European businesses now are top 3 in the world for OpenAI products. Paid subscribers of our consumer products actually are top 3 in the world also. And so there's an incredible demand and I think an incredible excitement about what it is that we're doing.
How does that break down sector by sector in terms of the most demand that you're seeing and maybe where some of the laggards are in terms of adoption?
Yeah, so it's actually pretty universal. So we see a lot of demand, for example, in financial services, in healthcare, a ton in education. Just to give you a couple examples, so in financial services, we work very closely with DKB in Germany. We work very close with NatWest. These are organizations with really, really big kind of logistical challenges of dealing with a lot of data, a lot of customers, a lot of complexity in the workflow. And that's what these tools do really well, is they bring the ability for kind of intelligence enhancement to workflow, right? To be able to say, okay, how do we actually bring more context in, more data in, and be able to actually use really powerful models like O1, O3, our new 4.1 model, our coding model, and be able to enhance the output of the people that work with these tools.
Are you seeing any pushback at all on pricing from customers, given the developments of companies like DeepSeek?
No pushback on pricing. What we're really seeing, though, is people want more flexibility in how to use the tool. And so as we do more things with the tool, as we bring more features and services to the product, we're going to have to figure out ways to allow people to consume all of that in ways that fit the needs of their enterprise. So one great example is we recently launched a product called Codex. This is kind of like an AI software engineer. You can kind of think of it as almost an agent, a software engineering agent that runs in a separate cloud environment that is totally sandboxed, but it can do these really complex software engineering tasks for you. And you can imagine a world where you've got a company that employs a lot of software engineers that actually wants to be able to provision a lot of that feature to their software engineers. And so our challenge is, how do you make sure that that company is not limited in their ability to consume that tool? And we have a lot more coming that we think is going to fit that mold.
And you have a lot more coming in terms of the style, in terms of agentic AI and AI agents. And what does that pipeline look like in kind of 12 months ahead?
Yeah, we think 2025 is kind of the year of agents. And we look at it as based on model capabilities. So as the models are able to do more things, they're able to use tools, they're able to reason, they're able to write code. All these things start to come together to actually enable them to do much more complex work.
We've heard, for example, from Microsoft, they're cutting 6,000 roles. A lot of those are coder roles. Shopify, Duolingo, and the Norwegian Sovereign Wealth Fund, they've all said that they can keep hiring essentially flat because of the use of AI. Is it fair to say that, at least in the short term, AI is capping job growth?
I don't think so. And I think that's because the world is actually gated on resources, on productivity, right? I think if you talk to any enterprise, and we talk to companies all the time, I ask them, what's their number one concern for how they think about the next 5 years of investment? And oftentimes one of the things we hear is, I can't hire enough software engineers. We live in a digital economy. I know I have to transition my product, my services, my business processes into more software-based approaches, but I don't have enough people. Right? So how do you now bring a tool to the market that enables a software engineer to be 50% more productive, 2x more productive? Right? This is an incredible thing. And so that's actually kind of the way we look at it, is to the extent you can enhance output, right? Then it really is just on the company, the firm, the individual to figure out ways to do new things. And so job growth, the job question will inevitably be different. Like, jobs will change, but I don't think there's reason to believe that jobs will go away.
Stargate is being built out in the US, obviously, with your partners. What about sovereign AI? What about Stargates outside of the US? Are you in conversations with governments around the world about building out Stargates outside of the US? What does that conversation look like? How many different countries are you talking to at this point?
Well, we see this incredible demand, not only from individuals, not only from companies, but even from governments, for how do we start to bring AI kind of into our country, right, into our kind of national consciousness, and have it penetrate in a way that, accrues benefit to the average person. That was really the big initiative behind our recently launched OpenAI for Countries, was how do we actually work with governments to design some of these programs? And that includes infrastructure, it includes deploying the models, it includes figuring out how to integrate government services, for example, into ways that would be more AI powered, AI native.
There was a push to change the structure so that it became more of a for-profit structure. That proposal has been reversed. It's now back to a non-profit structure with that public benefit for-profit unit underneath. That structure, we're still waiting for final sign-off. Do you have commitments from SoftBank that $40 billion of investment that they've pledged is going to continue in that largely unchanged structure that we're looking at now?
Well, so SoftBank they're a great partner. First of all, we built what I think is a great partnership with SoftBank, and we're mostly focused on how do we make sure that the structure that OpenAI exists in is set up for the future, and we think that the PBC structure is great.
And SoftBank's $40 billion is still solid. They're still good for that.
Like I said, we have a great partnership with SoftBank.
Brad Lightcap, COO of OpenAI, speaking to me exclusively here in London. Now, computing firm Quantinuum is expanding in the Middle East, meanwhile, with a $1 billion joint venture with a Qatari investment firm. It was one of the partnerships hailed by the White House during President Trump's Middle East visit last week. Quantinuum CEO Rajeeb Hazra joining me now from the Qatar Economic Forum in Doha. Rajeeb, thank you so much for your time. Talk to us then about the implications of this deal. $1 billion US. You're deepening your partnership in that part of the world. Why, and what is it going to lead to going forward?
Tom, it's wonderful to be with you and particularly feel the energy of the Qatar Economic Forum behind me. So let's get to the deal, right? This is continuing what has been tremendous momentum and interest around quantum. In Qatar, the deal is all about building and accelerating the commercial impact of quantum technologies in the many sectors that are represented not only in Qatar but in the region, from energy production to health and life sciences, financial systems. The $1 billion is to accelerate that ecosystem through primarily three things. One is around getting state-of-the-art infrastructure into Qatar and the region. Number two is actually building the solutions and use cases that are going to be deployed and do their part of the digital transformation. And third, and least but not certainly the last, is workforce development. Continuing to build the workforce of tomorrow that are aware and become experts of AI plus quantum. That is what this deal is, and it's really a strategic investment by the country in order to kind of transform their economy, diversify their economy, and become a world player in the AI plus quantum world.
Rajeeb, what is your current best assessment in terms of providing scalable, large, commercially available quantum computing? What is that time frame looking like right now?
Well, Tom, if you'd asked me that question 2 years ago, we would have said, sometime in the early 2030s. This is how fast technology moves for us in the quantum space. We are now looking at having, very critical standpoint of having 100 logical qubits. I mean, that's typically accepted by the community, by the technologists, as the tipping point for being able to do interesting things like discover new materials, find large solutions in graphs and those kinds of things. We are on track to, as we've disclosed, to get that in early 27. So that's a 5 to 6 year acceleration of our technologies. As you may have seen, the QBI DARPA bid is actually another place where we are engaged in bringing that technology to market in large scalable industrial fashion. We feel very comfortable that that future has been brought in by at least 3 to 5 years, and we are leading it because we have the proof points of systems today that are well on the path to creating that class of scalable systems. So it's not a question of if. That was a question 2 years ago. It's not even a question of when anymore. We are pretty clear that by the end of this decade, we are in very, very useful, scalable, industrial scale quantum computers.
Okay, very interesting. So the time frame has been brought forward. It's an increasingly competitive space, Rajeeb, of course, as you know. You claim to be, or your team claims to be, leading on this front in terms of quantum computing. What happens in terms of the competitive landscape? Do you look for acquisitions? How do you see that playing out?
That's great. As we build out the technology, it's still primarily a technology-driven business. We feel very comfortable about our technology and our technology lead. Look, if it goes by what quantum computers can do and what they're really useful for versus kind of science experiments and 1 to 2, splashy news items, we are well ahead. We feel very good about the technology path. We're also de-risking that technology path as opposed to others who may be looking at it as a collection of big Hail Marys that come together in the end. And so we have been, this is our 4th generation quantum computer, we have been on that path of actually de-risking and showing how that technology can scale, mature, and deliver increasingly powerful results on a commercial basis. So I feel very good about being a full stack company, having the technology lead, having the software and the hardware work together, and most importantly, having the customers along with us that are essentially going to use AI and quantum to retransform their businesses.
And where does that leave your IPO plans?
So we're looking, as we've made public, the quantum stocks have done a very nice run-up. Lots of interest. Technology has come in. 25, 26 should be a very, very interesting time for us from that perspective.
Okay, 25, 26. Quantinuum CEO Rajeeb Hazra, really appreciate your time and your insights on the back of that deal. On the ground for us, of course, at the Qatar Economic Forum with the details and the prospects for quantum computing. There's plenty more coming up. Stay with us. This is Bloomberg.
never believed we were as exceptional as people were saying. I never believed that Europe was as bad as people are saying. America's asset price, I still think they're kind of high. I'd put that in the risk category too. And credit spreads are kind of low. I'd put that in the risk category too. I think both of those things may change.
Very relaxed look there from JP Morgan CEO Jamie Dimon speaking at the company's Investor Day. He also warned about complacency in the markets. Well, retail investors looked past that yesterday because they rode to the rescue essentially for the S&P 500, which was down at 1.1%. And then you saw this dip buying surge, particularly around 12 p.m. and on, which according, in fact, to JP Morgan's number crunchers, was the largest on record, $4.1 billion of US stocks being bought by retail investors. They were back in play. They were buying the dip on expectations there was going to be a put around this market. So you saw actually the S&P 500 ending the day in positive territory. Let's touch on something else that's evolved just in the last couple of minutes. Well, the story's been there through the session today, but this is the story around the sell-off in the Japanese bond markets with yields higher across the curve, but most pronounced in terms of the 30-year. The highest yield, 3.1% the last time I checked, which is the highest since 1999. So it's on record the highest, on concerns amongst investors in Japan that the BOJ is stepping back. You had a very badly received auction in terms of what played out earlier today. That has led to jitters in the market. You're seeing selling pressure then, yields up across the curve, and that 30-year, again, at record highs in terms of yields, 3.1% in Japan. Let's briefly check in what's happening in the cryptocurrency markets. There's a few developments coming through here. You've seen some momentum in terms of the upside. Our team at MLive, Mark Cranfield and co, suggesting there's further upside potentially for Bitcoin. You've got the passage of a bill that's working its way through the Senate, and then you have some momentum in terms of what softer dollar could mean for crypto as well. The upside has been there certainly in the last month. The opening trade is up next. They're going to walk through some of these issues. Stay with us. This is Bloomberg.